Welcome to our deep dive. Today, we're analyzing the 2026 housing market recalibration. If you're planning to buy a home, the most important advice is wait. The market is currently navigating a complex transition period. Prices that skyrocketed recently are finally meeting the cold, hard reality of much higher interest rates. Many prospective homeowners feel stuck, watching mortgage payments climb while their dream of owning a home seems to drift further away every single month. To understand 2026, we must look back at the volatility from 2022 now. We've seen record lows followed by an unprecedented surge in property value. But the data suggests we are approaching a plateau. The era of unchecked growth is ending, giving way to a period of much-needed market stabilization. Look at these interest rates. They're not just high. They're reshaping the landscape of affordability for the average middle-class family and first-time home buyers. We are finally seeing a shift in housing inventory. Imagine a warehouse that has been empty for years, finally starting to fill with new housing options. As inventory increases, the power shifts back to you. The days of desperate bidding wars and waived inspections are slowly coming to a necessary end. However, we must address the cost of living. Inflation has outpaced wage growth, meaning even if house prices dip, your dollar has less purchasing power. This gap between wages and housing costs is exactly why a recalibration is necessary. The market must align with what people can actually afford. Many fear a total housing crash like 2008. But what we're seeing now is fundamentally different. This is a controlled housing reset, not a collapse. A reset means prices returning to historical norms and inventory reaching healthy levels. It's a correction that ensures the long-term health of the real estate economy. Professional guidance is now essential. Instead of rushing into a bad deal, smart buyers are taking the time to consult with financial advisors and experts. By looking at long-term data, these buyers realize that the risks of buying in an inflated market far outweigh the benefits of moving right now. Visualizing the market through heat maps, we see the transition from high-risk red zones to stable yellow and green zones across many major urban centers. These green zones represent areas where supply meets demand fairly. In 2026, we expect more regions to reach this state of equilibrium for new buyers. So, what should you do in the meantime? First, monitor interest rates closely. Even a small drop can significantly impact your future monthly mortgage payment. Second, focus on building your savings. Having a larger down payment will give you more leverage when the market reaches its stable point in 2026. Third, stay patient. Emotional decisions in real estate often lead to long-term financial regret. The right home will be there when the timing is perfect. The 2026 housing market will reward those who are disciplined enough to wait. Your financial security is worth more than rushing into an unstable market. Take a deep breath. The future of homeownership is looking brighter. By being prepared and staying informed, you will be ready to move with confidence. Wait until 2026 for the stability you deserve. Stay tuned for more economic updates, and keep your eye on the goal of smart, sustainable homeownership.